Hi, Jonathan York, Bay Financial Partners, looking at investment markets. US equities having another pretty major boost after the latest round of earnings coming through. Certainly the banks have reported, and they were on the whole sort of slightly better than anticipated, but now you started to see some of the big techs, and Netflix was really a standout performer there, really pushed up both the S&P and also the NASDAQ. But the market is going to get a pretty clear test towards the end of the week. We've got GDP data coming out, and also as well the Fed's sort of preferred inflation measure of PCE. But at present, the US economy looks pretty robust. You've still got a reasonably sort of strong jobs market. No, not as strong as it was sort of 5 to 6 months ago, but still ticking along at sort of 150 to 200,000 a month. And again, with reasonable growth coming through, that's potentially enough to sort of have this sort of Goldilocks scenario where you've got inflation coming down, which clearly it is, but you've still got a robust economy that you won't slip into recession. And the US market is still pricing in sort of 2 to 3 rate cuts this year, sort of starting between March and June of this year. But Fed officials are very clear to emphasize that it is data dependent. And with this sort of robust and resilient economy, interest rates have sort of nudged up a little bit. 10 years back at 4.17, and the 2 years back at 4.40. But still a pretty volatile series, especially in that 10-year. If you look at it sort of 3 to 4 months ago, that was trading just over 5%. Then it sort of fell below sort of 4%, around sort of 385, and I say now back around sort of 4.17. Now, the US primary is in full swing, and Donald Trump just had another victory there in New Hampshire, and it's now really down to a 2-horse race between him and Nikki Haley. Interesting as well, the Japanese share market has sort of seen some pretty amazing sort of rallies over the last sort of 6 to 9 months as well. And that is back to levels now not seen since January 1990. Now, oil is just nudging just a little bit higher, really, on this sort of ongoing conflict in the Middle East, and really not being helped by the Houthi rebels that are sort of attacking and bombing ships in the canal. So oil currently around sort of 74.70 and change. Now, the UK has been battered by another major storm. This is the second one in a week now. And it's seen widespread sort of flooding and disruption, and also damage to property as well. So it's just going to be very interesting to see what sort of disruption to the UK economy. Now, Europe so far has sort of a relatively sort of mild winter. Really hasn't been too sort of cold. We haven't seen any sort of issues like the energy crisis. But all the time you've got that Russian-Ukraine war just dragging on. And it's getting very close now to entering its 3rd year. Now, the Australian economy is still pushing on at a pretty reasonable rate, although sort of Queensland is sort of bracing itself for the next sort of potential cyclone coming through, and it's just going to be very interesting again to see what sort of damage and disruption it causes. Also, as well, we've got the latest inflation data coming out soon in Australia. It's going to be very interesting to see if that continues its downward path. Now here in New Zealand, some very good news on the inflation front. Latest CPI data for December came in at plus 0.5 and 4.7 year on year. Now that plus 0.5 is versus the Reserve Bank's estimate at its last meeting, which was plus 0.8. So that's 3/10 better than anticipated, and really again sort of clearly showing that inflation is on a downward path here in New Zealand. Now the Reserve Bank due to meet in February. The OCR is 5.5. No one is calling for an interest rate hike. Just it's going to be very interesting now to see when the talk starts to come about potential cuts. Especially if we've already seen a cut from the Federal Reserve in the US. Now that's a big increase from the previous year. And that's obviously against a backdrop of rising interest rates as well. So again, the New Zealand economy doesn't look in too bad a shape. It's been a pretty warm summer so far. Tourists are out there spending money, and it's going to be very interesting to see what the latest GDP numbers are. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.